Welcome to the Profit Answer Man, Matt Uhler. It's great to have you join us today.
Thank you so much. It's great to be here. I'm looking forward to sharing some dialogue with you about some of what you share on your podcast.
And I am looking forward to it as well. Feel free to ask me questions as well. Can you share a little bit about yourself and your business?
Yeah, I sure can. So as you said, my name is Matt Uhler, and I've been working as a business broker for 28 years, so more than half of my life. And about 16 years ago, I decided to start buying into businesses. So after, quite a few years in the business brokerage industry, I came across some opportunities and have partnered up in quite a few businesses. So I've owned 35 businesses in my career. I still have an active ownership in 20 of them, and I'm actively involved in about half of those. So I come to the podcast today from a standpoint of having brokered and borrowed and bought and sold and managed all of the aspects. And it's one of the things I certainly love.
So you have a ton of experience. So let me ask you a question. What is one of the biggest reasons businesses fail?
It's when it comes right down to it, the reason I see the failure is when they run out of money. So there's lots of issues that show up in between getting there. But when a business runs out of money, it's game over. There's no more time to try to solve the problems that show up. So that's where it becomes game over from what I see.
And why do they run out of money?
Yeah. So one of the reasons is that either A, they're not watching the financial statements along the way. So they're not realizing what's happening behind the curtain. They're so focused, you've heard and I've heard you share about working, in the business as opposed to on the business. And that seems to eludes people to the point that it could be too late. And then it becomes a matter of they've been losing money for a while or losing their operating capital for a while. And then some crisis comes along and they don't have the money to sustain it or to work their way through it.
There's a quote I've been hearing lately: slowly at first, and then all of a sudden.
Painful.
Painful. Go ahead.
Yeah, I was just going to share that, I especially saw that around COVID. So fortunately for so many businesses, the government dumped tons of money into the system to keep it going. But a lot of businesses were running right up to the end. And then something as significant as COVID comes along and it puts some people right out of the game.
There's no doubt about that. I think the second problem of COVID that nobody still talks about, a whole bunch of people got EIDL loans and they spent it.
They did.
And they're going to spend the next, how long is the payment? 20, 30?
30 term.
Years. So if you're a 40-year-old in business, you got a long ways to go of paying that money back. And I don't believe maybe you can declare bankruptcy on it, but you have to declare personal bankruptcy, don't you? Because if you took more than, I think, $500,000, you signed a personal guarantee.
It's the real deal. And unfortunately, to your point, I saw people buying all kinds of things that they could justify through the rules, but that were not direct industry expenses or business expenses, RVs, boats, all kinds of toys that depreciate significantly. And it really wasn't the purpose of the loan and, all of the relief that was supposed to come from it.
Correct. And what we had told people during that time is borrowed money is not used for operating capital. Borrowed money is used for two things. One, to create safety. And two, if you need to make a capital allocation to grow or improve or do something. In other words, 3 of your competitors are going out of business. Let's go buy them. Okay. Not let's go buy the RV.
Right.
That's going to grow your money and it's not going to last. So how do you determine how much operating capital you need?
It's an interesting question, and there's all kinds of calculations. In my businesses, I personally calculate that number as more than I could ever imagine needing. And I know that may not seem very wise to some people. Well, you're not using it where you need to, or it's not working for you. But in the situation I'm in with the number of businesses I have an involvement in, I don't want to be worried about making payroll. I don't want to be worried about some catastrophic issue, a truck getting totaled or something like that, and not having the money to be able to deal with it. So for me, it's just a little bit more than I could ever imagine needing in a crisis situation.
Is that 3 months of expenses, 3 months of revenue, 6 months, a year?
Yeah, great question. And this is why it's so elusive. And I'm sure you see this with your clients too. I have an ownership interest in businesses where the cash flows every day of the week. And so again, we're not worried about accounts receivable and accounts payable because we're feeding it all the time. But in the businesses where there's accounts receivable that can be 60 and 90 days out on a regular basis, then oftentimes we're looking at that amount plus 1 month fixed expenses. So what's our typical accounts receivable plus 1 month's fixed expenses? And that's the number that we keep as operating capital. And one other thing I'll share about that, my formula for managing operating capital is that all of the direct industry or all the direct business expenses are paid on a regular basis, but no distributions are made unless it's above the operating capital reserve. So if our operating capital reserve is 250,000 and we've got 300, then we distribute the extra 50, but we never distribute to ownership or partners anything below that threshold. It just don't do it.
When you say that to other business owners, how do they react?
I know it's not fun. They don't like it. It's not a glamorous way to or exciting way to run a business, but for me, it is absolutely the way to sustain the longevity. I mean, in my mind, business ownership it's a marathon. It's not a sprint. And I don't want to be stressed out every day of the week, nor do I. It's just not any fun to be worried about not being able to cover the expenses and thrive on the business, let alone take advantage of an opportunity.
And I think that's the part they forget. Taking advantage of opportunities. In the business world, opportunities come along. And I've seen them with my clients where they can acquire something for 25, 35 cents on the dollar. But you have to be quick and you have to have the ability to stroke that check. And I mean, even if you did that once every 2 years on a sizable purchase, that's major dollars. Not to mention, what I have found is a couple of things. When the bank account's full, it's easy to say no to business that is not exactly desirable, right? But you did it
Absolutely.
because you had to, and that and sleep. So yeah, it's nice to have that kind of liquidity, Carrie. I mean, I don't have a ton of. I'm a coaching business. I don't have a ton of. I still have ridiculous amounts of working capital. Just to say, if all my clients disappeared for a year, can I survive? Yeah, I can. Not a problem. And so it allows me to just live within my values and do what I want and be good with it.
Well, and you alluded to sleep and stress. And, it's, again, a lot of people discredit that, I think, to some extent. But I know that I make far better decisions when I'm not stressed out about money or something else. And that comes with having enough in reserves. And I've learned it the hard way. And during COVID, two of the businesses I had an interest in, which I thought had more than enough operating capital, it was gone in weeks. And that certainly helped me to adjust to what I think is enough. And now, do we anticipate another storm like that coming along? No, but both of those businesses survived. I wouldn't want to do it again that way. I've increased the operating capital reserve in both of those since that time, simply because I don't like the feeling of it.
Well, we haven't had a recession in 17 years or something.
Right.
These things will happen. It's just normal.
Mm-hmm.
How often do you notice business owners are actually on top of their numbers and looking at them in a regular relative basis?
Yeah, so I would say probably 30%, and this is as a broker. So when somebody brings their business to me and they want to sell it, probably 30% of the time they have a pretty good grip on their numbers. And now a pretty good grip, meaning they know how to work their way through their tax return or their financial statement. However, I would say it's down to probably 10% that once I start analyzing percentages of cost of goods sold, payroll, revenue increases or decreases, that's probably 10% or less have ever looked at their financial statement from that perspective. And that's a powerful way to read a financial statement, is to look at those percentage differences, because they can mean so much, even just a couple percent on a sizable business.
It's funny because I was looking at a business the other day, and when I looked at the P&L, it looked decent. And then I started looking at the balance sheet, and I started to say, and then I started putting percentages and ratios in, and I went, oh. And that's why they were calling me, because when you start to do all that, you start to realize, even though they're massively growing and revenue is going through the roof and they're profitable, there's massive problems. And it has to do with timing of cash, debt service, excessive distributions, no capital reserves, and a couple of bad months. People don't realize you have a couple of bad months. Let's just say you're $1 million business. You're spending $100,000 a month, roughly, if you're a little over $1 million. You have 3 bad months, you're out 150 grand.
Mm-hmm.
It's going to take you a year probably, if not more, to recover your $150,000 that disappeared in 2 to 3 months. I don't think people understand that ratio, so to speak.
Well, and it catches up quick, right? I mean, it's one hiccup or two hiccups. And I see it a lot of times when a key person leaves or a new competitor comes to the market, because a lot of times, and that's not the time for people to call me as a broker, but that's when they do, because, okay, now I've had it, I'm done. And they want to turn it over to somebody else. And those add a lot of difficulty when it comes time to sell, because nobody wants to buy somebody else's problem. Or I should say, most people don't want to buy somebody else's problem.
Well, if they do, they buy it for pennies.
That's right.
The other thing that I think that shows up when you start to look at those numbers is what I call creep. And creep, it's insidious. In other words, 1-2% here, another 1-2% here. You get 5-2% and you're off 10%. And for a lot of businesses, 10% is their margin, their profit. And so 5 things get off a little bit, not a lot, just a little bit, and you go from making money to breaking even. And I don't think people realize that. In the same way, when I tell people we got to grow top line 10% without doing any more work, they're like, we can't raise prices. I'm like, we can get 1% here and 2% there. And within a handful of things, we're at the 10%. So the math works both ways.
Well, it's funny. I learned that lesson when I was young. I started a business when I was 17. It was a service business. And I was growing like crazy. And then I was growing so fast that I decided it was time to go get an operating capital loan. And when I got declined for that loan, because the lender said, listen, you're not making money, I couldn't understand, because I was growing so fast. And it forced me to do exactly what you just said, which is start analyzing the business and realize that I had customers that I was paying to give them the service, because I was so entrenched in the day-to-day that I was not analyzing the business. And once I started looking at every line item as a percentage compared to what it historically was or should be, was when I found all of those holes and was able to fix and steer my business to profitability and then sell it ultimately, which is how I got into this business. It was looking at the percentages closely.
And that's what it comes down to. If you don't have a dashboard and you don't see it monthly, it doesn't take long for that slide to occur. What are the biggest issues you see when people want to sell their business?
It's either financial, meaning that there's not enough discretionary earnings to support the price they need. And, most businesses are valued from a financial perspective based on a multiple of discretionary earnings or EBITDA or owner's cash flow. But then the whole other aspect is operational. And there are businesses that are extremely profitable, but operationally they're a train wreck, where they've got huge customer saturation or they've got employee saturation, where one person leaving could devastate the whole company, or that one person leaving being the owner, meaning it is so tightly wrapped around them that without them, I've literally had buyers say to me, listen, I love the business. There is no way I can step in that owner's shoes. Just can't do it. So they haven't diversified their responsibilities and all of that, or I should say authority, enough to be able to let somebody else step into that role. So those are, financial and operational are certainly the biggest issues. And I guess that's a broad answer to your question. Probably the biggest one, what I would say, would be the operational aspect. There's so many holes in it operationally that people just can't see how they can step into it and take it over and remain the profitability or continue the profitability.
It's funny, it depends on the business that I'm working with, but we tend to find that there's a seesaw. And the seesaw is, we need to drive revenue, or we need to deliver, which is operations. And it goes back and forth between the two. It's not often that you see people get both of them running well and not putting out a fire on one side or the other. But over time, if they will listen and they'll do it, it gets to be much, much easier to run the business when you're not running around putting out fires all day long.
Well, and that's really, a lot of times people, they don't need to sell at that point, right? Part of the reason they want to sell is because they're so stressed about the operation of the business, because they haven't designed it in a way that's really sustainable or something that will fulfill them long term. And if they could do that and would do that, they may decide they don't need to sell it.
It's funny. This is the bane of my existence here. I like to make relationships with business brokers because they have all my potential clients, people who have a business that's not profitable. And I'm like, look, you can't sell that. Why don't you send them my way? But then I think they're partially afraid that if they send them my way, the business will become so much fun that they won't be able to sell it in the future. I don't know. We'll have to talk afterwards. How do I build a better relationship with these people to get to help them with the people that they can't help at the moment?
Well, and it's one thing if we want to touch on that now for a second, because I've referred lots of clients to advisors and coaches, and it just becomes that pain threshold, right? They don't want, a lot of times people won't do what they need to do to help better themselves unless they're in crisis. And if they would, most of my clients as a broker, their biggest asset is their business, but yet they won't feed it like they will feed so many other areas of their life through help like you offer people to add value. I mean, you can add a lot of value in a business very quickly with the right.
I guess I didn't think how closed off they were to getting feedback. I guess it's true. I mean, we don't work with people like that. If you're not coachable, we don't want to talk to you. And I'm guessing those type of people just don't make it into our ecosystem.
Well, I think that's it. It reminds me of sometimes from a medical perspective, right? They won't go to the gym or do what they need to take care of themselves medically until they're faced with like, you're going to die or you're going to have a heart attack, and then they'll go get the help they need.
No,
and I
they
think
won't.
a lot of times they won't. Yeah. But I think it's true too for business people. It's easy to put off what they might need to do to help themselves and just focus what's in front of them and not focus on big picture and long-term planning.
It's all about driving revenue, especially unprofitable revenue. It seems to work out well, I guess. I don't know. How do you determine the value of a business then?
Yeah, I get that question a lot, and it's really an art and a science. And so the science is math, and to a very large extent, it's how much can the business afford to pay for itself. And if the business can't afford to pay for itself, at some point, it doesn't make financial sense for a buyer anymore. And then the artistic aspect is how desirable is that business going to be to the fair market? And so from a math perspective, I evaluate the business based on a financial feasibility. And as a broker, about 70% of my transactions, we help arrange the financing for. So I look at it very, very closely from a standpoint of the financials and its ability to pay for itself in the lender's eyes. But then as an example, if I have a business with huge customer saturation, well, that's going to sell for a lower multiple than in the exact same business with great diversification of the customer base. Equipment, you take one business, let's just say it's a landscape company, right? And one, all of the equipment is just junk and needs to be replaced. The other one is sufficient for the job that it needs to fulfill. Well, that's where it's going to change where on that level of multiple that it ends up selling for. So it's really an art and a science, but fundamentally it comes down to how much can the business afford to pay for itself.
I'm a big fan of traction in EOS.
Mm-hmm.
Does having let's call it an operating system, a user's manual for the business, have a big impact on the price of the business?
So that would fall into the artistic element.
Yes.
So again, you take a business that does not have it, where somebody thinks that they might, let's say a buyer thinks that they might have all kinds of issues because there's no operating system. Likely they're going to pay less for it because of those concerns and need to offset those issues. Whereas the businesses that I've seen, like you're describing, where they have those systems in place and methods and processes in place, people are willing to pay top dollar for them because there's less risk. They perceive less risk because, everything's tightened up, as really it should be ideally.
It is. And that's what I see too. I don't know how many times I have to say it. So if you're a business owner and you're like, look, I'm happy with my business, I'm going to be running it for some time. The first thing is, a lot of times in the back of their head, they're like, well, I want to sell somewhere down the road. And I've always told business owners, maybe I'm wrong, you need at least 3 years to prepare for sale, meaning you have to have 3 good solid years to show where you didn't buy the RV, you didn't pay the kids, you got rid of your, in-laws on the payroll, because all of those things matter. If you're getting 4 times your profits and you've got a family member on payroll at 50 grand that's not doing anything, that's 200 grand, right? That you're not getting paid. So you got to clean all this up.
Well, it's such a great point. I mean, there's so much in there. So 3 years is ideal. I tell people 3 to 5. Now, I've sold businesses with 1 year's history, but they don't sell for a premium. And so to your point, I mean, if you operate, if a business owner operates their business as though it might need to be for sale at any point, not only is it saleable at any point, but it's also a healthier way to run the business. And then the other aspect that you referred to is, I just had this conversation with a client the other day where there was some, let's say, a second set of books or some cash that wasn't being run through the business. And I said, listen, I don't really want to talk about it because it doesn't, as far as I'm concerned, there's no need for us to talk about it, except for the amount of money they think they're saving on taxes is costing them $2, $3, $4 in sales price. Mm-hmm. So to save 30 to 40 cents on the dollar to lose $2, $3, $4 per dollar, it doesn't make any financial sense.
Here's a little secret. If they took that money and put it in a retirement plan, they would get the tax deduction. They get to keep the money and they could get the multiple. And now they also have a fallback in case the business does blow up, this retirement plan that's fully funded that they don't even need to sell the business. That's just the way I think. I know other people don't think that way. That's their choice. But there are ways to do this that make better sense. And yet they're just not sexy.
They're not sexy. That's right. And that's where coaching comes in. I mean, unfortunately, a lot of business owners, just like myself, started out just doing work well. And then before I knew it, I had a business and an asset. And I didn't really have the education at the time for some of the things like you're sharing. And even when it comes to financing a business, I mean, there are add backs is what we call, which you might say the RV that they're running through the business or the in-laws wages. You know, some of those are bankable and some of them are not bankable and some of them are not even worth talking about. And they cut so deep. I had a client not too long ago. We were under contract in escrow, getting ready to close just after the first of the year. And he couldn't stomach what his tax burden was going to be from the prior year. And so he deferred a whole bunch of revenue into the next year. And literally, we were able to undo it. He amended the return and undid what he had done. But he literally killed our deal because he was worried about that 30 to 40 cents on the dollar for a multi-million-dollar transaction. So it's the instant gratification, I think, that motivates people to make some of those decisions as opposed to find other ways to potentially get a greater benefit for long-term success.
People hate the IRS more than they love making money. It's fine. You know, it's funny. For quite a while, real estate was really booming and everybody was becoming a syndicator and everything else. And that has slowed down just with interest rates and everything else. Now what I see everyone doing is buy a business. And you can buy a business and you don't need to run it. Like, it'll just run itself, seems to be the talk. And even in business owners where the business owners are involved, I see a lot of them abdicate responsibility or abdicate making sure that, like, they'll say, go do this, and they'll just assume it's done, and they'll never check, they'll never verify, they'll never have controls in place to make sure that the things are happening that need to happen. What has your experience been?
Well, it's funny, you talked about the bane of your existence. And one of the things, part of the reason I got into the education and training business is because of exactly what you just shared. And online social media these days is, in my opinion, oversimplifying the idea of owning a business and suggesting people simply pick the business based on the industry as opposed to their core competency or the proximity. And I'm sure you see it with your clients. I've certainly seen it with mine and the businesses that I own, that running a business hands-on is tricky enough. Running a business absentee or even semi-absentee can just be devastating when things don't go well. And I had a client not too long ago who literally, he was on site, but he wanted to take himself out of the business, so less involved in the day-to-day. And so he delegated all of that, and I'm going to call it authority because ultimately he still had the responsibility. He delegated all of that authority to a key employee who just about sunk the whole business and went out and started his own and is competing with the owner of that business right now. And he became so hands-off, even under the same roof, that he didn't realize that his business was literally crumbling right in front of his eyes because of who he delegated that authority to.
And it happens in a variety of smaller ways. And again, 1%, 2% here times 10 people, and there goes your profit margin. And it doesn't take a lot. I know before we hit record, you talked about it too, in the sense of salespeople discounting. right? Because they know just get the sales. Or, everyone's like, oh, we're overworked. Let's hire some people. And what I have found more often than not is a lot of times that's a leadership issue, whether it's the owner or the person below the owner. I can tell just by looking at the ratios of labor to gross profit. And I'm like, your workers aren't very productive. I know they're very busy, but I don't know what they're doing because they aren't delivering to the client. That much I can tell. And so we're always looking at those types of ratios to see, is the labor productive?
Well, that comes back to the percentages. I had a client who I helped buy a business who came back to me and said, listen, I'm not getting the same result here. And I said, send me all your financials. Let me study this. And his payroll was off. So from a percentage, his payroll was off. And I said, so what are you doing different? He said, well, I got the same number of guys. I got very much similar. But one of the things that he wasn't aware of, which he discovered as he dug into it, is that his guys started making regular trips to the gas station every day. And so you put 3 or 4 guys in a truck. In this case, they happen to be guys in a truck going to a gas station for 15 minutes every day of the week over the period of a month. Just that alone was enough to change his percentages in a way that he wasn't aware of until he really started looking at it, because it seems so small. But to your point, you take 2 or 3% on a $2 or $3 million worth of revenue, it becomes a real number it's worth making sure the owner collects as opposed to distributing it out into the ether.
Hopefully they weren't getting breakfast on the gas card too.
Well, I've seen that as well. But in this case, it was just time. It was just it was him loosening up on the time management, which multiplied by 2 or 3 crews, 2 or 3 people per crew. That many number of days in a month he was losing money. He would have had to shut the doors if he didn't discover it, if I didn't discover it.
And a lot of times you can just have, within a crew, let's say there's 6 or 8 people, and one bad apple messes up the whole crew. And a lot of times people won't tell you until after. And then you're like, why didn't you tell me before?
Yeah. Yeah. And I think the essence of, what we're talking about is certainly some of the negative aspects of what can happen. But what I've seen is that businesses, people who start out as a technician, right? They're in the trenches with the crew that then get a business large enough where it needs to be managed. It's just a different role. And part of that role becomes watching the financials and watching the dials, as we talked about, to find out if we're heading the right direction and to predict any issues that might show up. And so that's where I see some business owners struggle. And that's why they call me as a broker, because they want to tap out, is because they're just either A, they haven't accepted that new role, or B, they're not getting the result they wanted, and it's just stressing them out.
Okay, for those of you who are stressed out, you don't have to sell your business. We just fix it. So you've mentioned that you've gotten kind of out of the brokerage side and into the education side. What's that all about?
Yeah, well, and so I'm still very much a broker. I work full-time as a broker, and I have a wonderful team in Arizona that we broker deals. But I've shifted a lot of my personal focus to education and training through a company called Amp Success. And so we provide coaching and training to people on how to buy, sell, finance, and partner in businesses. And the reason I've done that is, to a large extent, what we talked about earlier. I'm seeing a lot of focus on social media where I'm having people call me as a broker wanting to buy a business that they have no core competency in, that they're not in the proximity. They think they can run it absentee, and people are getting hurt financially because of some of these decisions they're making, where they end up in a transaction, and a lot of brokers will help them get into it. And then they're in serious trouble. I mean, I had a client not too long ago who, her and her husband were under contract to buy a multi-million-dollar car wash. They had no experience. It was not in their proximity, meaning their location. It was a remote distance. And when we analyzed the financials, I mean, they were so grateful their offer was not accepted. So I just see a real need, and it's for me personally, it's an area that I'm excited to move into after 28 years of helping people buy and sell businesses, to be able to teach people how to make sure they do it wisely and get the outcome that they intend.
How do you know if your broker's to me, that's an ethical issue, selling you something that you're going to blow up? Is there a way to tell that, or you just...
Yeah, it's funny in real estate, which is a much more established industry than business brokerage, right? I mean, a lot of brokers out there, a lot more knowledge in the real estate world than in the business opportunity world that I've seen. Now, whether it's great knowledge or not, or information, I guess is yet to be seen. I see the look on your face. So it's yet to be
I
seen.
come from the world of real estate. Yeah,
Okay.
98% of real estate agents.
Yeah, it may be very similar. And the whole concept of buyer beware, that's great. And to me, buyer be educated. And so what I've seen in my world as a business broker is there are brokers out there that know, they've done their homework, they know how to guide people in the right direction, and they have the ethics to be able to tell somebody, listen, I don't think this is best for you. I've also seen lots of brokers, and literally one of the people that I trained with said, listen, it doesn't matter if you know what you're doing. You just have to get the right listing, and the buyers will pull it out of your hands. Well, it's not ideal, right? I mean, my career has been built on referral because I help people get the right business to be able to thrive. And so whether the brokers are actually intending to let people hurt themselves or guiding them to that path, or they're simply just not paying enough attention to guide people correctly, I'm not sure to speculate. But I do think that's where it falls on the buyer to make sure they have enough knowledge, regardless of the broker's capability, expertise, or intent for them, that they know whether this is passing the sniff test and is going to work out for them long term or not. And that's where amped success comes in, is my desire to give people that knowledge to be able to make those decisions wisely, regardless of who's advising, or to evaluate the advice they get would be the other opportunity for them.
Occasionally, I mean, this isn't my area of expertise, but occasionally I will have one of my current clients want to buy another business or look at opportunities. And I'm always just send over the data. Mm-hmm. Send me everything they're giving you. And it's just amazing what you can see just looking at the numbers. Things that you wouldn't imagine just show up a lot. And especially when you have historical numbers direct from QuickBooks versus the magical stuff that gets produced wherever to show people, or tax returns for that matter. Mm-hmm. And we tend to see a lot that I think excited business owners miss. And so we've helped people negotiate deals and change the terms, because that's the other thing I don't think they realize. There's a million ways to set the terms. And I like to have terms where I don't have money up front, that the seller has skin in the game over the first couple years, and will reward them for skin in the game. But this makes sure that they're actually selling something of value, because too often after the fact, there's just nothing but horror stories.
Yeah, one of the examples I have, which goes back to some of what's being promoted on social media, is just get seller financing terms and so on and so forth. I've had several examples of people that focused more on the seller's willingness to carry back and less on whether it made financial sense. And the structure was designed, the business couldn't afford to pay for itself based on the amortization that was offered, but the buyer got so focused on the opportunity for seller financing that they jumped in and went down that road. And so what I've seen, to your point, is a lot of my clients will use an SBA loan, which is a very low down payment, and some portion of seller financing to make sure the seller picks up the phone, or if there's an issue that shows up, there's some recourse there. And that creates an environment where the buyer, the seller, and the lender are all vested in the success of that business. That's very beneficial.
But I feel bad in the situation that you mentioned. If the buyer can't pay the seller, I don't want the seller to be in that situation, because the whole thing's going to blow up, and then the seller's stuck with a business that's less valuable and all these problems. That's not fair to anyone either. It has to be the appropriate mix that everyone can succeed.
Well, and that's example, you're absolutely right. There was no business for the seller to take back. And I'm not convinced the seller designed the deal in a way that wouldn't make financial sense. I think, to your point, they didn't know, neither one of them knew how to read the dials.
Yeah.
And they didn't seek assistance like you provide, where it's kind of like, if you're going to buy a car and you don't know what's under the hood, you should hire somebody to tell you what's under the hood, right?
More importantly, you should know how to drive.
That's important as well. Yes.
Just saying. Is there anything you wanted to chat about today that we didn't get to?
Let's see here. That's a great question. I think for me that what's inspiring me the most these days is buyers and sellers being educated about what it is they're doing with one of the most significant assets they own in a seller's case. And from a buyer's perspective, typically one of the most significant financial decisions they're going to make. And so often they're trying to do that on a shoestring and not protect the financial aspect of what they're getting into. And from a buyer's perspective, we've certainly talked about this quite a bit, but from a seller's perspective, most of the people that contact me as a broker, not all, but most, are making an emotional decision to sell and not a financial decision. And I don't mean that as if it's just emotional and it's frivolous. I mean, they're tired, they're worn out, they've had enough, they don't know what to do next. And that leads them to making a very significant financial decision based on timing of when to sell, as opposed to strategizing about how to build this asset in a way that is absolutely saleable for the most money possible and is something that's great for the buyer to purchase and will go on and serve their family for a long time to come. So that's really what is motivating me right at the moment, is after this many years of being in this business. There's a lot of pain out there that's unnecessary with a little bit of education about what they're getting into.
I might have to start marketing to them. If people would like to learn more about your brokerage services, your educational services, how do they go about doing all of that?
Yeah, so as a package, if they look for mattuhler.com, that's my name, of course, Matt, UHLER.com, they will get directed to me. From an education standpoint, it's ampedsuccess.com, and I'm on all the social media outlets. And from a brokerage standpoint, WCIbusinessbrokers.com. That's where you can find me, and I look forward to helping in any way I can.
Cool. We'll put that in the show notes. Thank you so much for joining us.
Yeah, thank you too, Rocky. I appreciate it.
Hey, thanks for listening to the entire unedited video of the Profit Answer Man podcast. You can actually get the full podcast in audio only format here on YouTube or any other of your favorite podcast players. Don't forget to go check out episodes 1 through 13. They lay out the foundation of Profit First in the book and how to get started. In addition, we've got hundreds of episodes for you to check out. And if you remember to subscribe, you'll always be updated when we put a new one out every single week. Thanks for listening. Have a profitable week.